mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast where we break down the world of investing from beginning to dividend so that you can hopefully make some returns. My name is Bryce, and as always, I'm joined by my equity mate, Alec Renahan. How are you going, bro?
I'm good, Bryce. I'm more and more thinking that I need to get you a similar nickname.
Okay.
But we'll save that for another episode. Stay tuned.
We'll hash that one out. So, in our Learn to Invest in 15 Minutes or Less, we are going to talk about two stocks that we picked right back at the start of the year. So for those that are new to the show, Ren and I decided to sit down and do an episode on what our predictions are for 2018. Some bold predictions, and off the top of my head, there were a few that resulted in betting on a case of beer. That was me. Alex going to give me a case of beer when the US stock market crashes more than 20% on September 15.
Yeah.
Very specific. I think I also bet Alex something to do with the price of gold hitting 1,500 US from memory. I don't think that's going so well at the moment. Alec, you bet me the Australian stock market would outperform the US for a beer. You also bet me that electric cars will be passed by legislation and put into action by a government by the end of the year. Now that's also, that idea is tanking, I think.
Oh,
so
really?
I'm going to get that. I'm going to get that one.
And then my last one was that Amazon will be all huff and no puff.
The other bet we made was that we both wanted to choose a stock at the start of the year, and then the winner was going to be the person whose stock was the highest at the end of the year on a percentage basis.
Yeah, who had the most growth?
That's right, whose stock grew the most. Now, a lesson for you all is do not do what we did when we chose these stocks. Because we both chose these stocks based on the fact that they were probably at one of their all-time lows, and we were both hoping for a bit of mean reversion.
Well, hold on. Let's go one by one, and we'll go why we chose the stock, and then how the half-year results have either justified or not justified our investment thesis.
Okay, cool. Do you want to take it away?
Oh, I mean, yeah, I guess one of us has to.
Well, I'm happy to do it.
No, all right. So I picked iSelect. Now, the reason I picked, for those who don't know, iSelect is a health insurance comparison website. Well, that's what it started as. Now you can go and compare electricity, a whole bunch of different insurance, a whole bunch of other stuff. Basically, it's a price comparison website. Now, the reason I chose it was because despite having a fair bit of cash on their balance sheet and steadily increasing revenue, the share had been battered the last year and was down 20% in last year. So I figured there would be a bit of mean reversion if the company just kept their consistent revenue and profit growth. So that gets us to our half-year results. EBIT, so basically profit with taxes and interest added back in, was down, but without those write-downs, their underlying EBIT, earnings before interest and tax, was actually up 20%. Consistently increased up a little bit. Some write-downs not great. Underlying EBIT was okay, and yet the share price has gone down again.
Dang. That's okay. We're still early in the year. So what are you thinking? Are you still confident with your pick?
Oh, mate, I wasn't confident to begin with, to be honest. No, look, I think there's potential. Business itself is quite scalable, but then also they're pushing into Asian markets to offer the same sort of price comparison technology. They're not perfectly related, but they're the exclusive supplier of a bunch of Google Home devices like Google Nest thermostats and stuff like that. So I'd give them away as part of their, you're moving house, get your electricity bill from us and get a free thermostat from Made by Google sort of offer. We'll see.
Okay.
Yeah, what about you?
Well, I was incredibly confident with my first pick when I chose it. I actually had a last-minute pivot and chose a company called Mayne Pharma, pharmaceuticals company, and I picked it when the price was 73.5 cents. So, how were their results? Shocking. Shocking. So for those that are unaware, Mayne Pharma is just a generic drugs supplier, and the generic drugs brand, part of their business is what really hurt them last year. So they had some really tough trading conditions over the last 12 months, particularly driven by a deflationary market in the generic drugs in the United States, which is where most of their revenue comes from. So what that means is that the generic drugs market, we're experiencing prices going down, and obviously that affects your revenue. So half year revenue fell 17% on the prior period, down to 240.3 million. Generic drug sales were down 19% to 180 million. EBIT down 36%. And they had a reported net loss after tax of $174.2 million. So the good news, I guess, is that the outlook, and something that they've been flogging like a dead horse since their annual meeting in November last year, is that they are expecting stronger second half results due to a stabilizing generic drugs market. And they've also been doing a lot of research and development, which is one of the major sort of aspects of these drug companies and where a lot of their money goes. And so they are going to be doing a number of new product launches going into the next half and through the next 12 months. So on the face of it, I guess it does look like a bit of a disaster for Mayne Pharma, but there is also some optimism in the fact that with the generic drug market stabilizing and prices becoming a bit more consistent, then the news, or what they're saying, is that the next 12 months should offer some stronger results. So fingers crossed. Without going into too much detail, that's pretty much a good little wrap of Mayne Pharma. So I chose them, as I said, at 73 cents. Not surprisingly, they've gone down. I chose them probably at their peak.
So, all right, let's do a state of play of the bet at the moment. So you picked Mayne Pharma at 73 cents, and now what are they?
70.5.
Okay, so they've only fallen 2.5 cents.
Yeah.
So what's that as a percentage?
So rounded, it's 5%.
And then for comparison, I chose iSelect at about $1.35, and they're now $1.18.
Yep.
So that's about a 12.5% fall.
Yep.
So you're beating me.
Ooh.
Yeah. But look,
that's all right. It's a patient game. You have better long-term sort of conditions, or
mate, you never know. If Mayne Pharma strike gold and find the next cancer drug or something, then all of a sudden 70 cents, 73 cents, it's not going to matter. It's going to be $700. So
I'm not sure about that, but yeah.
Well, mate, if they cure Alzheimer's, then you're golden.
Too right. Well, let's hope that's happening. But look, this time last year they were at $1.46, so I could, who knows what's going to happen.
Yeah, I guess the big thing that you might have to watch is what the hell's going on with the American healthcare market. Are people insured? Does Obamacare, will it function? They stripped out parts of it, but not other parts. So I guess that'll matter for you, but not much we can do about that. We just got to watch the Trump show.
I know. Trump show will roll on. Go Mayne Pharma.
That's one bet that we didn't talk about, that you think Trump will be impeached this year as well. So
I did throw that one out there, feeling less confident with that as well as the year goes on. But it's only March, so we've still got plenty of time.
That's it. So I guess what our listeners should have learned from this is that anything that we talk about, anything that we bet on, anything that we predict is more than likely wrong. And really, we're in a competition to see who picked the least bad.
Yes, this is by no means any advice on, and this is also a very good lesson in buy what you know. I know pretty much nothing about Mayne Pharma. Other than it sells a few generic drugs. Obviously, I'm learning more as I go, and this is going to be a good learning experience for myself over the next year to get a better understanding of this company. But obviously, the way that we chose these companies was, I would say, unconventional.
Yeah. A good and very public learning experience.
Yes. Yeah. Well, we'll keep everyone updated. It's going to be interesting to see how these ones pan out. And I'm looking forward to doing the episode where gold hits $15 US and I get to choose what sort of beer you're going to be sending me, Rent. So that's going to be good.
Yeah. All right. Well, look, we should wrap it up there because we're getting close to 15 minutes again. If you haven't already, make sure you sign up to Thought Starters. 5 interesting articles in your inbox every Monday. Great way to start the week. What I've done is with a couple of the emailing lists that I subscribe to, I get them sent to my work emails. Good way to sort of distract yourself from whatever you're doing at work and read something that interests you.
I think things to look forward to over the next few episodes as well. We've had a correction, which was exciting times for us. Market corrected 10%. So we're going to discuss that in the coming episodes. We haven't had the ability or opportunity to talk about that and what that means and why it happened. So stay tuned for that. And we're looking forward to seeing how these next few fortnights go. But I'm pretty keen, man. This should be good.
Yeah, I think we made the right call, pivoting. I think short, sharp podcasts are the way of the future, and hopefully we're riding that wave to a big community of listeners who can rip on us with our terrible stock picks and advice.
Yeah, who doesn't want to learn to invest in 15 minutes or less?
All right, guys.
All right, well, that's a wrap. Thanks for listening.
Until next time. Equity out!
Equity Mates and the people appearing in this program may have positions in the companies mentioned. This is general advice only. Please speak to a financial professional to understand how it may pertain to your individual situation.
Equity Mates.